All right, guys. Right. Don't envisage today's session being super long, but yeah, we could perhaps go and take a look at what's been going on in markets as well. The thing I wanted to do today was just sort of set out sort of what I'm trying to put into debrief, why I'm putting it there, what my kind of take on essentially what happened Wednesday, because that was the bit we prepped for. It's always a lot easier to debrief if you've done a prep because you've got something to relate back to. Yeah, it's really easy to debrief stuff if you weren't there or if you didn't prep for it, because every trade looks like the best opportunity you've ever seen. Oh yeah, well, if I was there, I would have sold here, bought here, done this, and everyone would have absolutely killed it. So there's not a huge amount of value in debriefing things that you weren't there for or you weren't actually trading. What you're trying to do is debrief stuff from the perspective of, well, this is what I wanted to do. These are the ideas I had. Am I executing them? And if I did or didn't, what have I actually learned from that so that I'm better at it in the future? You've always got to look at a debrief that this is going to help you in future do something. If it's not doing that, if it's just a chronology of events, if it's just information for information's sake, I don't think it achieves a great deal at all. This afternoon, what we'll do is a bit on prep for the week ahead, a little bit on to what I do with those debriefs at the weekend. There's not much to show in that respect, because I think debriefs over a weekend or reviewing your debrief is more about sort of going back through it. One, that gets it stuck in your head, and two, it allows you to kind of think about what you would do in similar situations in future. I don't think you actually need to be able to or need to put too much onus on doing. It's about the kind of absorbing and the ability to then, almost a creative type approach, which is probably something most traders don't think about or don't think that they are. I think most people think they're much more analytical than creative. I actually think most traders, or a lot of good traders, are actually reasonably creative people, because you got to think how to do something different. Analysis is ultimately probably going to take you down the same route as everyone else. Anyway, before we start on that, just to mention, because there's been a couple of questions about sheets and order flow exercise examples, which I'm reasonably confident I have put in the group. However, they do disappear on the page. Maybe I didn't when I intended to. I've asked that they can all get put here. So on the course page under materials, there'll be various different sheets. There's profile summaries, there's hypotheses exercises, the additional ones that I suggested the other day, etc., etc. There's going to be a few more things that should drop in there, possibly within the next hour. I would at least expect by the end of the day. So you will have that. Anything else that anyone feels that they have missed or that I've said I'll put in and I haven't, let me know. I'll try and get them in. What I might try and do, because I want to share some of the debrief sort of templates and debriefs that I've done to give a sort of example. I might create a document and put the links in it rather than just have link. So there might be one document with a variety of different useful links that I will put in. So that's where everything will go. So for those of you who have asked, that's where it's going to go. Right. Okay. Right, let's get to it. Right, so the idea of today was, or this part of today was just I'll walk you through what I put into debrief from Wednesday. We all watched Wednesday. We saw the attempts to try and get something out of Wednesday. What I'll sort of show you is what my sort of take on that was. And for a debrief, one of the things that you always want to try and do with a debrief, and I have elaborated on this. Initially, predominantly, all you want to do is just get some information down, because that's the bit that you can then learn from when you go back through it and then ask yourself, well, what exactly were you trying to do? What are you actually trying to learn from this? So, I will send this one over. There we go. That should share. Okay, right, with debriefs, a bit like the Fed one that I talked about yesterday, dead straightforward. First thing, make sure you got a date on it, make sure you give it some kind of description. Again, if you want to come back to this in future, it's far easier to remember a description rather than a date. There's only a few very specific dates you may remember. Chances are you remember them because it was either a huge loss or a huge winner, and apart from that, you don't remember the dates. Maybe a huge geopolitical event, the Italian lockdown, beginning of the Russia-Ukraine war, Pfizer vaccine, Lehman Brothers, those types of things. But I could probably list off 10 dates over my whole career that I could say, I know that this happened on that day. if you're in future at some point seeing the S&P open, chop on the open, and then absolutely melts down off the open, there's no way I could remember what day that ever happened on in the past. Even if it was a huge day, even if you did max short it on the break of the opening range yesterday and took 40 handles out of it, I still don't think you'll remember specifically that day. To give it a name, I just put, I've called it a ferocious sell-off. That was a good description of it. This was also a day after the heightened Russian nuclear threat as well. Whilst that may sound repetitive, that you probably write on the previous day, Russian nuclear threat, what you're doing is you're finding then in future, if you get any other similar type scenarios, the other days around that period. You know, if you've got one listed, unless you find that one, you're going to find it hard to find the other stuff. So just try and make your life a little bit easier. You can tag stuff on Evernote, although it does seem that their tagging seems to have disappeared. I'm not actually a huge fan of the tags on Evernote. It's one of these things, you can create tags, and I'll show you on there. I have got so many tags that they're completely pointless. I would suggest don't bother tagging stuff. Or if you are going to tag stuff, be very clear before you start how you're going to tag stuff. That would be the thing I'd suggest there. Otherwise you end up with all of this, and I've got millions of, a lot of them very similar, and a lot of them I've got one tag under that category, simply because I've written something and then in future I've described it slightly differently. So that's that bit.
Just on that point, tagging in Evernote,
yeah.
I noticed, I learned yesterday, you can actually, it's called nesting tags, so you can have like a tag with subtags. So
Okay.
once you do organise it, like you might say news events or geopolitics or technical markets or concepts or whatever the things that you are,
Yes.
once you build that structure, you can then create a similar structure in the tags. I don't know whether you can go to multiple levels. You might just have to do that through the book or separate with hyphenation between like level 2, level 3, but that's also a technical thing.
Ah, right, that might be good to do. I actually think, despite it's one of these things.
It's not a typical tagging approach.
No.
Typically tagging across other technology platforms.
No. It's probably something, if you have done what I've done and tagged a load of stuff, you'll get a lot of value by just going back through and reorganizing, because it will force you to re-look over what happened, reassess what happened, and therefore understand it better. So there's not, you know, despite the fact mine's a complete mess, there is some value in going back through that, because you're going to take on a lot, because you've got to answer some questions for yourself in doing that, and you'll learn a lot by doing that. So worth doing in that sense. What I think, and this is something Brannigan suggested ages ago to me, is he would always list out trade opportunities. I know I mentioned this in the video. There is probably a lot more on this, and this is the kind of thing where you go back afterwards and go and ask yourself, right, genuinely, were there other trade opportunities? This is a chance to get down stuff even if you didn't trade it. The reason for this being, and this isn't like looking at stuff going, oh, well, that was a chance, that was a chance, that was a chance. You could list millions of things. These have to be things that you genuinely could trade, i.e. it's within your skill set rather than just whatever you've seen. But worth getting these things down. The thing that this helps you with in the long term is remembering that there are always opportunities, and you don't have to dive in on every first bit of action of the day, which a lot of people like to try and do. So get that down. Sentiment, yesterday, day before as well. My view on sentiment generally, I try and split it between volatility, correlation, and then theme, environment, and how you would describe that. I'm not looking at what the VIX is. I'm assuming the VIX went up over the last couple of days, perhaps not that dramatically actually. And this is the thing, the VIX may not have moved a great deal, because at the end of the day, the S&P went down, went up, but ultimately stayed within a range. There is no way, if you watch the S&P for the last couple of days, you're saying that it hasn't been significantly more volatile than it was previously. So it's, for me, it's a sliding scale, and it's a personal interpretation rather than it's something you can assign a number to based on VIX. Yeah, VIX is ultimately not entirely volatility, it's option volatility, which is a different thing. So I would look at it on a sliding scale. Yeah, for some people, if you're new to trading, this is the most volatile thing you've ever seen. And there's nothing wrong with calling this very high volatility. If you've seen higher, then obviously it's not, but it's a sliding scale. Yeah, over time, you'll sort of go back on this, go, okay, that was volatile, but now I've seen more, kind of thing. So I'm more looking at the sort of trajectory of it. Yeah, last 2 days have been volatile, and it's been increasing in volatility. What you're looking to try and get a sense of is whether this is then peaked and we're now decreasing, which allows you to then, as you go forward, just manage your expectations of the day, or is this getting even more volatile? Correlation, you got a general risk off. The thing that I'd put down on that though is that bonds seem to struggle to hold moves higher. You've seen that the last couple of days. When they go up, Bunds slightly changed that today. When they go up, they don't seem particularly good at holding themselves up, and they roll over quite easily. The equities do as well actually, but they have been a little bit more able to sustain downside. You've got theme sensitivity. The big theme now is the US missiles fired into Russia. That's the big theme. That's what everybody's focusing on at this point in time. So I was just watching a Euro stocks bit of movement. That's the thing that everyone's watching at this point in time. I've also get down any commentary that might be helpful. This, when you go back, one, helps you in terms of understanding context, but it also keeps you in line. You don't just think about this as, oh, I'm looking back at this on 6 months, but part of this is your prep for the next day. You just get all of this stuff down, you know the story, you know what's going on. It becomes a lot easier for you to just keep track of everything. You know, if you're relatively new to trading as well, what it also does for you is it means that you're building up an understanding of narrative as time goes by. You know, a lot of the stuff that you do with debriefs is almost slightly, I don't want to call it subconscious, but you're picking up stuff just by virtue of doing it, rather than, you know, everything has to have a precise, so this leads to this. So I know trading feels a lot like that a lot of the time, that, you know, I've seen this, I'm going to do this, but a lot of debriefs is about just absorbing information and trying to build up your understanding of stuff that's going on. Most people have some variation of a kind of personal overview of how well you traded. This sets the tone for the coming day as well, stuff that you want to actually make sure you try and improve the next day. So part of prep the next day as well. For me, these are generally the things that I sort of try and judge my performance based on. In the past, I've done vast numbers of different things. I've tried to score things from 1 to 10s and stuff like that. The problem with scoring 1 to 10s is most things are a 7, an 8 if you did particularly well, a 4 if it wasn't great, and a 2 if you're annoyed with yourself. So actually you only give yourself 4. I never give myself a 10 because I never feel that I've done a day perfect. I never feel I'd give it a 1 because I just don't want to slam myself that much. So everything becomes a 7. Everyone likes 7. You just end up gravitating towards it. So I would just change it, just make it dead simple. You've either done, it's high, medium or low. My sort of take on each of these is focus is a sort of general view of, yeah, how much am I actually thinking about what's going on? Like, how much clarity have I got in the day on what's actually happening? Commitment, why it's decided to cross stuff out rather than just put an X in the box, I don't know. That's an Evernote thing. Commitment's willingness to actually get in trades. Are you putting the trade on? Are you sticking to the idea? Which I actually thought on Wednesday, commitment was relatively low. They didn't really commit to ideas fully. And that relates a lot back to the whole idea of had a plan and then didn't go, well, this is the idea, go for it. Energy, I thought I was reasonably high energy on Wednesday. I was feeling quite good. That's always something. The reason I track that is just to help you sort of think about, you know, whether you were actually ready for the day, prepped for it, and did perform, or whether actually part of your lack of performance is you had a bad night's sleep, you drank too many beers the night like before. Be honest with yourself. I didn't, so I was feeling pretty good. And the other one was patience, which I actually thought I held a fair bit of patience on Wednesday. Patience is just down to, are you chasing stuff? Are you rushing into trades? The reason I have those things rather than other things, they're things that I know are quite key to performance for me. I know that I'm naturally quite an impatient person. I may not always seem that, but I am naturally quite impatient, particularly when it comes to action, as in, if I do something, I expect to see a result relatively fast. So I struggle with trades where I have to either wait to be able to take the trade on or wait whilst I'm in the trade. So that's something that particularly for me is quite an important thing to sort of focus on, as well as commitment to ideas. I have a propensity to lean back towards a sort of original scalping type style and not commit to an idea. Whilst I'm pretty confident in my technical ability, I know that I have this temptation, which comes back to patience as well, to go, oh yeah, this is a good idea. And then it starts to stall, you're like, yeah, but I could take a bit back here and here and here. And it can lead to, one, either over trading, or two, just becoming frustrated with the whole day because you thought it was going to go 30, 40 ticks. You sold it and took the first 10 on a bit of momentum, and then you messed around trying to buy the dip all the way down. I know that that's a challenge that I face, so that's why I put it in there. where you've made and lost money. This is something I've taken from another trader who started doing this, just to try and list it out in a table. I'm not going to go through every single trade. I think there's a lot to be said. Most day traders are going to do quite a large number of trades in a day. So that's to be said, but don't go through every single trade. But generally, your trading usually moves in phases throughout the day. You're not trading at a specific cadence throughout the day. You are trading in bursts. There's some action which is a reason to do something, then not much, then there's some more action, and so you'll kind of move through phases in the day. So I would try and break it down more in that way, rather than trying to go through every single trade, rather than doing it that way. Made money post the initial balance once it's settled down. Lost money because I cancelled a stop because I was doing something with Mike, left the stop there and it went wrong. Never mind. And flat, basically, for not committing to ideas and trying to scout the way down without really sort of going, no, this is the plan, this is what you're going to do, and do it that way. I'll try and explain some of those trades in a bit. Things to learn from, even if you know this stuff. At the end of the day, I've been doing this for long enough to know that you don't have to do everything in the first hour. Obviously, we were talking it through on the screen, so it's quite always, you feel you've got to try and explain something. But if it gets away from you, another chance is going to come. That was where I thought patience was very good, to be able to go, it's gone, wait for it to do something. There's some more stuff you could do later on. And also trusting technicals. And it's one of those things, even if you know it, it's always worth reminding yourself. Most of the mistakes or challenges or difficulties that anybody has are things that you've always had, and they're probably to a degree slightly just inherent natural tendencies. You can't talk yourself out of these things entirely, but you can at least remind yourself, which reminds you to make sure you're considering these things in the coming days to try and then better deal with your natural tendency towards sitting in trades for too long, getting out of trades too quickly, getting influenced by what other people say, all of those types of things. So that's something I often tell myself: trust your prep, trust your technicals. One of the things I did have taken the last couple of days is European markets in particular, and Bund even more so, is extremely technical. It is holding levels very nicely. It's doing the obvious stuff. Just trade the obvious stuff. Just sit there and click away at it and wait until you lose on it. The tilts idea is something that's going to help over a longer term rather than just on a day-to-day basis. Main thing, you could kind of call it chasing after missing a move as well. No, don't want to click it. There you go. Just wants to show how I can't spell. That's it. There you go. Whoops. I get those things down just so you can kind of keep a track of, are there consistent things or things that are becoming more and more prevalent? Add new stuff if stuff starts coming in as well. Your goal is to a degree, try and solve most of these problems. It's not ever going to quite happen, but you'd like to see that some of them don't seem to happen very often. I think being influenced by others is something that over time you learn not to do. You learn that, in fact, most other people are not necessarily doing the trades they're talking about, but they're talking about a good idea. There's one thing to have an idea and it's a different thing to do the trade. You also got to bear in mind that some people are frustrated because they're in and they're not getting filled to get out of trades, rather than they're in and they're frustrated the trade's going wrong. There's another thing of, if someone is already frustrated, why do you want to jump in that boat with them? They already don't like the trade. Don't get involved with that. Stick to whatever your idea was, and don't overweight the value of other people's opinions. There's a lot of very experienced people you may meet along the way who may have great ideas about this, that, and the other. Doesn't mean they're right, and that's a really important thing to remember. I learned that not super early on, but when we were all grads, they started bringing in a thing where you had to go. We were in at 6:20 in the morning, so you come in 6:20, and they got one of the sort of bosses got to sort of stand around and explain our trade ideas for the day. I remember he sort of explained a bit of a view, and I gave my opinion on the bobble and what I thought was going to happen, and he absolutely slated it. He's like, it's a ridiculous idea. I do not want to see you doing that trade. And it worked exactly like the way I said, and it kind of just gave me that thought of, well, it doesn't matter how much conviction somebody's got and how much experience they've got. My idea had reason. Maybe it was lucky it worked that day, but it had some reason to it. So don't underrate your own opinions on stuff. If you planned it and you can explain why, it's just as good as anyone else's.
Plus, a winning trade on someone else's idea, not your idea, is not a great trade, ultimately. right? Because you're not helping yourself. And although you think, okay, it's great, I listened to the senior trader and he had a great idea. I mean, you can ask for their perspective, but you still have to assimilate it into what do I want to do? Do I disagree or disagree?
Precisely, and you can't.
They're not there.
Yeah, and you can't replicate it, because even if they said, I'm going to sell the bund through this low, you don't know the reasoning and why that would be different on a different day.
Well, 5 minutes later they say, you say you're short, and they go, no, I saw this, so I didn't sell it.
Yeah,
right?
precisely.
You sold it and you're massively
Yeah,
right?
exactly. And that's the thing. That's the one thing from other people you can't ever understand, is the nuance of the decision. They can explain the general structure of why they're going to do something, but the point of pulling the trigger, there's a lot of nuance to that, and that's something that only you can understand if you know the trade yourself. Right, for me, the biggest problem I thought on that day was just getting married to a bias. I was too keen on the idea that it's bounced back and it's going up, which is, I've never quite sort of reconciled how to weigh that up, in the sense of, if you stick to your general view, which my view all year has been, whenever the S&P goes down, look for a chance to play a move back up. It doesn't stay down for long, and sticking to that all year, you're right. But it's still quite a hard one. You'll get a day like this where you're, well, my generalized view shouldn't impact my day-to-day trading. It's a hard one to reconcile, whether that's just a case of this is an opportunity you're always going to miss if your view is we're in a bull market, buy every dip, and you have to just accept that, or whether you have to look at it from the point of view of, well, you're not a long-term trader, so trade what you see on the day, and just keep in mind that almost you flip it and go, well, if that is my way of doing it, fine, play every breakout to the upside, but don't dismiss playing shorter term moves to the downside. That's probably the way to try and sort of think about it. What I then do, this would be the kind of what you'd get down on the day, and I wouldn't go into loads and loads and loads of detail. Just treat this to you're capturing information, and that's it. So, simple way I'd do this: get a 5 minute chart. Get a 5 minute chart, get profile. Two reasons for this, particularly as a new trader. One, you'll start to see how the profile relates to the chart. If you have a profile that looks like this, you have a chart that is not always going to look banged like that, but there's going to be some similarities, i.e. large IB, large choppy consolidation, but some decent ranges in that. That's the thing that you always have to remember with these types of moves, that whilst it feels like it's all over, that move there is 30 handles, that reverse is 25, 20, another 20. There's a lot to be done in this, and all of the action doesn't have to be done here. You're not going to make money out of that unless your view really is play the break of the range and go for the reverse of the entirety of yesterday. It was definitely a potential idea. It was just something I didn't want to believe in. That was my biggest problem with that. And again, this is the importance of having a plan and look into the idea of, well, if something gets in play, if you go for it, like if you sell that break of the box there, which was the initial idea, by the time you get to 15, you bought yourself the chance to make a decision. You bought yourself a chance, even if you thought, okay, 15, which is that previous significant level, it's been over and over and over. If you look at that and went, okay, I'm gonna have a go at buying 15, you've got yourself 15 handles anyway. You buy 15, it tries, it doesn't go, it tries, it doesn't go. Maybe you take a small loss, but at least at that point, you've then at least taken something out of it. It's not changing. You're then a little bit more willing to go, okay, well, I've taken a loss. Maybe I'll just have another go at trying to sell this. You stay with the direction. But if you don't do that, what you end up with is you're down here, you have a go at buying 15. If this doesn't work, it's then gone far enough that now you don't really want to sell it because you've got nothing to support having a go at selling it. So if you've lost on this and here, you're now down, you're seeing it absolutely fall out of the sky. It's quite a hard one to then watch it get to 95 and go, yeah, I'm going to try and sell this for another 15 handles when it's already gone so far. But if you've had a go at that, you've seen the way it moves there, okay, you've tried to play that and it's not worked, you've got out for a loss, and then you try and play the next leg, it feels a lot more comfortable. Yeah, at the end of the day, even if it goes wrong here and bounces back, you're still probably up on the day, which emphasizes the whole idea that if you've got a plan, just go for the first bit of it. If that works straight off, you put yourself in a great position. They don't always, but that's also the bit where if it doesn't work straight off, you've got information. If you don't get that information, you end up missing out on a lot of opportunity. I'd put there, that's not selling. Not willing to accept the speed of the sell-off and found reasons to buy 15, 08, 94 rather than selling with the momentum, which I think was a reasonably fair assessment of it. But again, the whole point of this bit is just, you're getting towards the end of the day. You ultimately don't want to be there for hours and hours and hours at the end of the day going through everything. Just get that information down. You can then go back and look at the specifics of trades even later on that evening. You can look at them at the weekend. But it's much more important to understand what's happened on the day and how you kind of went about trading it. The specifics of every trade is the kind of thing you can work on at a weekend and look at, well, how are you doing these things? What is up with your execution? This way, if you've recorded stuff, you can go back and watch your execution of stuff. Particularly by being a few steps away from it, as in a few days, you give yourself that break. If you go and look at every trade yesterday or Wednesday, you'll try and solve the problem of Wednesday on Thursday, which is not necessarily the right thing to do, unless you get lucky and Thursday trades just like Wednesday, which it did. So there are those types of situations, but that's quite rare. The thing to take away from this, from Wednesday, was the way it came off. If you see that the next day, you're much more willing to go for that. That was the opportunity yesterday.
Something I took away from that day was, and you can use ChatGPT to do this, so I've asked ChatGPT to give me a list of all of the opening drives in the ES this year, where don't tell me whether it was up or down, so 2 things, don't tell me whether it was up or down or the range, so I can go back and trade it. But secondly, so I can then go back and look at the patterns on opening drive days, where the IB low held. What was the price pattern that develops after it? So I've got some context in my mind. If I'm not in the opening drive to the opposite side of where I was anticipating, I've got something to lean on that said, oh, okay, this happens all the time. What do I then expect to happen? I'm starting to plan again for it, rather than being caught on the wrong side of the opening drive and trying to buy it because I'm trying to impose my desire for the market to go up. I have like a procedure for being on the wrong side of an opening drive to align my thinking out of the emotion response to what I'm seeing to a structured response of, okay, well, what's going to happen from here?
Yeah, exactly. And that, for me, I think that was the big takeaway from this, that once it settles down, it became quite clean, I thought. This is what I described as like a flowy, scalpy move. It definitely had some flow in it. It was quite clear in the way it moved. All the way down here, back up. This is your kind of short-term technical dream type stuff. It moves down, it pulls back, it moves down, it pulls back, it has a flip over and it reverses. But it does a lot of the real clean technical stuff, which always happens when markets get more volume, more volatility, more movement, because everyone's scrambling around for ideas and where to get in, where to get out. It makes a lot of these levels work really nice. Even just simple stuff like that. That first bounce from 15 and it holds it like to the tick on the way back. It reacts very cleanly off a lot of really obvious places. It was really nice. And then you had late day rally as well. I'm not going to do much of that kind of stuff because I'm not there for it. There's no point in trying to read too much into that. To try and play for that type of thing, it's something to start to look at. That is there a longer term pattern in this where you get in a market that is broadly bullish, rips down the page at the open, normal type day, how often is it then reversing back up? It's definitely something to look at because it did the same yesterday. Something else to bring in is, and this is an evolution type thing. I've literally thought of doing this today and just because I was going to try and look at specific markets. Well, actually, if you can just get a load of charts together, so I've got bonds along the curve, currencies, commodities, equities. If I just put everything on a 15-minute chart, you can see broadly what's happened, because this is about correlation. It's about understanding what things are generally doing, not the specifics of price movement and where we went and technical patterns and all the rest of it. But you can see quite clearly the way things have reacted throughout the day. The gold move goes down and up. And one way to sort of try and make a bit of sense of it is to actually just draw on it. Like the S&P have gone down and up. The Europeans, on the other hand, have gone down and sideways. So even if you just literally draw over the charts, you get quite a quick picture of what's happened. The European bonds really didn't do a great deal of anything. They've not really sustained movement. The treasuries as well haven't really been sustaining movement. If anything, it's the short end that's selling off. So you just start to pick up what's going on in different markets, and it can then help you quite quickly. Okay, well, if I'm trading the S&P, what do I want to be watching? I'd say broadly, the S&P probably stuck reasonably well as like an opposite of gold on the whole. And to a degree, the opposite of gold, the opposite of the longer end bonds as well, to some degree. But you see that like the correlations are not super clean, I don't think, at this point in time. Oil seems to do its own thing, so I'd leave oil alone, or just trade oil for oil and just watch that doing whatever it's doing. So that's a new thing that I brought in. The only other thing that I then do, and this is the bit where you go like through the actual trades afterwards of what you did, where you took the trades on, the sort of reasoning around them. So that's a trade I quite like when you get the pickup in momentum. It sort of drops down, you feel it holds, it sort of does a little flick and you can sell it. That was partly an element of feeling that I should have got in and maybe then talk myself out of it, because really my big thought was it's going to hold 15 and this is going to explode through the high. It's going to do 15, 30 and then up was kind of my overall bias, and that was the trap for me. So attempting to buy it here, attempted to buy it there, attempted to buy it there. And you can kind of see that, well, they're sort of trying too hard to try and achieve something. You know, you're always waiting for it. It bottoms, it starts to go, and you're like, yes, this is the one. And it wasn't, over and over and over. What I did well was then not getting too caught in this. I think this is one where you don't want to then lose, and then get annoyed that it's bounced. That move's gone. And I think once you start to get into this phase here, you have to then look back and go, this is gone now. You're not getting in on the bounce. What you don't want to do is get caught then trying to buy the break of every high on the way back up to rectify the problem that you've got yourself into to start with. That's a classic one that people do. They do it all the way back up and they buy it, and they don't get anywhere with it. And then it rolls over and they buy the dip and then they lose. And it becomes really, really messy. And before you know it, you stopped out. So it's worth going through. And what it helps you do is then look at, well, where have you actually done well on the day? Particularly if you're new. And I would really emphasize doing this. Yeah, if you're trying to understand what exactly you do, where is your edge? What are your best skills as a trader? Just go back through all the trades you've done. And if you want to annotate them up, I'd do them in different colors, do them in like red for losers, green for winners, just to make it really easy to go, oh look, I do really well when it's settled down and it then starts to get some clear direction. I don't do well on fast sell-offs or whatever it is. Yeah, are you actually as good as you think at momentum breakout trades, or are you actually far better at trying to find a little reversal move like that? By doing that every day, particularly if you just change the colors on it, it's really easy. Oh look, all my winners happen to be counter trend or with trend or breakouts or bounces from levels, whatever it is. The more you get that information down, the more conviction you have in future about what exactly you do well. So that would be the other thing that I'd get down. Yeah, that was the only frustrating bit, because I got in quite well on that sort of drop, pullback, sold it, got out, sold it, got out, and then deleted the stop, and then it went back up, which was annoying. So these things happen.
I can't believe you took the stop out and walked away from the desk. That's pretty.
That was pretty cool. I deleted the stop to move it, and then I went and did something and forgot to put the stop back in. Absolute schoolboy error. Everyone makes them, and there you go. It doesn't matter how long you've been doing this. You can make the same mistakes.
Surely you wouldn't just walk away with their stop.
It happens. It's the same where let's say your short 5 lots, you've got out of 3, you had a stop for 5 and you don't change it, and it comes back. Now you're long 2, and then it goes back down, and all that you made on those 3, on the ones that you got out, you're then losing on the way back. It happens to everybody.
It's a pain because it's not easy to modify your limit entry order into an OCO, right? So like if you do OCO from the start and you just do a limit order, then you've got forced to put the stop that's not an OCO. You can't make the stop an OCO based on your existing limit orders.
What you also need to remember if you do an OCO is if you scale out of the position, the OCO doesn't change. No. So you would have to, so let's say for example here, you buy 5, you've got your stop there and your target, I don't know, let's say here. If you scale out, it jumps up and you sell one here and then you sell one there, that will stay 5 and that will stay 5. So
because you're entering a separate order from the OCO, you'd have to separate the 5 OCO limit sell orders into individual ones to bring them down to be able to be scaled.
So the way to do it is if you think you might scale out, you do 5 1-lot OCOs, so that at least you can then delete one of them each time.
Admin pain in the arse if you're trying to get into a position, right?
But I don't think there's a way on any platform to do that as your position gets down smaller, your OCOs also decrease. There's probably something programmable to do that, so it understands that your OCO has to relate to your position size. But yeah, Jigsaw doesn't do that, which is a little bit frustrating. But yeah, it is one of these things. Everyone always makes a mistake like that, or you've got out more than you think you've got out, and so then when you go to get out the final bit, you actually cut in reverse rather than get out.
That's the danger of like a technology platform dock, is right, you keep hitting like sell, and you end up being 15 long, or you end up being 15 shorter than you're actually trying to get out your original position, right? And if you mix that up with a volatile condition, you could end up quite badly offside.
Yeah, exactly.
That's number. Fine.
Yes, it is. Yes, I've had many, or I haven't personally, but I've seen numerous examples of that type of thing. Great question from Darius. If we have a larger move in mind, admittedly does not always play out when I'm looking for it. Yeah, but same with everyone. Is it reasonable to get in what I think will be the large move, which will inevitably have some pullbacks, and keep a determination to hold on until it hits the target, or is invalidated, but scalp the opposite direction on a correlated market when I start feeling uncertain about the continuation, or does this lead to too much lack of clarity? I think it's going to influence your trading to a degree, and also I would just look at it separately and go, right, if you're looking at two markets, so let's say you're looking for a sell-off, and I know that Darius's temptation is always to go towards scalping NASDAQ. I'm never a big fan of scalping NASDAQ because people take too little out of trades, which feels like you're doing a lot, but you're not. I think you could do it and just go, right, I'm selling the S&P, this is the move I'm looking for. Now the NASDAQ's broadly going to do something similar. You could just scalp it. Don't try and think I'm going to scalp it in an opposite direction. Don't relate the two things. The S&P is a directional trade for whatever reasons you have. The NASDAQ you're scalping based on what's happening. If that happens to be going down and your directional trend, the S&P is working as well, that would probably suggest more likely you're going to be selling the NASDAQ. Don't see that as a problem. What you don't want to do is try and hedge your S&P risk by trying to pick every low in the NASDAQ and play the bounce in it. What you're going to end up doing is probably getting to the bottom of the move, you take a 30 handle winner in the S&P and you've lost the equivalent amount of money in the NASDAQ, assuming you're trading the correct ratio of size, and you'll be frustrated about it. And you're better off to go, look, this is a trade, I'm playing it, short S&P, stop, target, leave it, do whatever you want to do in the NASDAQ and treat them as separate things. That would be a better hedge on your S&P than it would to be trying to trade it the other way. Essentially what you're doing is you're hedging your technical skill with your scalping skill. Look at it like that, that's your hedge, not trying to pick every bounce. If you can pick every bounce in the NASDAQ,
don't trade the S&P.
Just trade the NASDAQ, just get better, just improve that constantly, because you'll be unbelievable if you can do it. So just de-link the two things. Yeah, it's a good way of sort of trading a view in an equity market, to pick one that you don't overtrade, don't trade particularly, and put that trade on, and then trade the other, because that's your main market. Yeah, and I've always found that with any kind of broader technical trade, if you can do it in a market that's not your main market, it's so much easier to do. I started off sort of testing out bigger technical moves. When I say bigger, I'm talking like holding it for an hour maybe, in oil, which is never my main market. And I actually found I perform well in oil on these types of trades. You've got a plan, the trade is you're going to buy it here, it's going here, put your stop, put your target and leave it. The more success I had in oil doing that, the more inclined to trade oil I became. Performance started to dip, because what I was doing, I was moving away from my skill set. My skill set was technical view on oil, put the trade on and leave it. But then I tried to apply a skill set that I seemed to be reasonably confident in European equities doing. We didn't quite trade the same in oil and ended up losing money, rather than just go, just stick the trade on and leave it. And it's a lot easier to do it in a market you don't trade much, because you don't have to think about it. You're not thinking about the minute by minute movement in a market that you don't pay that much attention to anyway. So that's how I try and distinguish those two. The only other thing I'd got down, it's always worth put your sort of P&L performance in. I don't want to track P&L constantly. more interested, not in the totality of P&L, but one of the things that I do think is useful to look at is the P&L progression on the day. Like, have you got the ability, if you go down, to come back up? So looking at the sort of trajectory of P&L on a day. That I think is probably the most valuable thing to look at, particularly if you're on a sim as well. But it's all well and good, you get to the end of the day and you're like, oh, I'm up. But if you had, this went like off the screen down here and you came back up, it's not a viable long-term strategy. So you want to be looking at, from the perspective of, yes, you can go down, but can you pull it back up? Equally, can you go down, and finish up? Or are you somebody who goes up, down, and that's pretty much the end of the day? So it's something that's worth looking at. But I wouldn't be focusing too much on many other things. Win rate, I wouldn't focus on too much, apart from assuming it's about 50-50. If it starts to deviate one way or another, you can get lucky days where everything seems to go your way, and particularly if you don't do many trades, you can end up with sort of an extreme result. If you've done 3 trades on a day, getting 3 right in a row is quite reasonable. Yeah, and that's quite reasonable on a day. Look at that over a month and see if that's still the case. I would, on the whole, assume it to not be. Otherwise, you could be swinging a long way offside. The only other thing in terms of other information would just be any other opportunities you saw. I thought Bund technically was really, really clear on this day, that you've got a straightforward trapped between VPOX trade. It trades down to the bottom, it trades up to the top. And if you basically tried to buy and sell each of them, it worked rather nicely. So that's more just something I'm getting in just for information, more so than anything else. The only other thing that I've taken from the last couple of days is, and this is something that would go into sort of a playbook of what I'd call an IB meltdown. So this is a new thing. This isn't something I'm adding to an old one, but just get down, well, the last 2 days, there's a few more instances of this as well. If you go back sort of a few weeks, there's a couple more instances where the S&P had that rip down. I think it was right towards the end of October, so like the last week of October, you had a similar thing where it did this rip down at the open and then straight back up. It was the bit where it did it in a range just above 5,800, I think. And it did that down, up, down, up, down, up. But it was another one where you'd had a directional move into a range, increased volatility, and it started doing that. So what you're looking for is, once you've got some sort of evidence of what happens, you're then looking at the idea of, are there sort of identifiers for this? Are there things that happen that suggest this might be a trade to be looking for? Just try and give yourself a little bit of a clue. And then also, how do you actually go about trading it? So what I've done as well, because you don't know how these things are going to play out and what's going to contribute to it, I put an hour before and then 2 hours after the IB, just so, if there's something really common about the way it closes the IB and reverses, in this instance it doesn't, it's just off the low, but in both of them it's virtually on the IB close, it starts to go the other way. You'd have to look at others to try and see if there's something in that, but just try and find out, is there anything in the way that it does these things that you can actually find and trade. Stick that into a playbook. It's the kind of thing that you just build up over time. The more of them you see, it's not about back testing and all of the rest of that sort of evidence side of it. It's more about, oh right, I've got this, it looks like that, it follows on like this. The next one, pretty similar, follows on like this as well. You can then start to, even if it's a case of there's something quite common about this bit, there might be a trade to be had there. This doesn't have to be the trade. It's, you start finding that there's some commonalities in there somewhere, and that's what you can start looking for. So that'd be the things to get into play.
The market frequently makes that pattern where it's like an inverted head and shoulders that goes the other way, or it's like a head and shoulders that goes the other way, where it takes that on that page,
Yeah.
the bottom one there.
This bit.
Like the first pullback, and then it makes like a second closer touch to the bottom of the line. I think it's 45 is the level.
Yeah.
Once it's made a big move, it often makes a similar pattern with that, where it touches at least twice, maybe 3 times before it then continues yet along there.
Yeah, that bit. I think
That's a repeatable pattern you can work well.
there might be something on, there's that one. It's not quite, but you might have seen that. If you extended that onwards on the 20th, you might have got that as well. I'm a big fan of the reversals, where you'll get a move down level, and then it will go level again and then bounce. And it's that finding that level, which usually, it's a lot easier if it lines up with something, which it lined up to the middle of that sort of 94 to 82 range, which was the base from the 19th before it exploded up. And it found that at 90. This is the kind of thing that you see that when it's trading there and it seems to have something at 90 and you can see that it's doing something. That's the kind of stuff, if you remember it, it then goes back there quite often the next, within the next few hours. It didn't actually do it particularly well yesterday. I don't think we went back down to the lows yesterday. It pretty much did that and then went straight up. That's another feature of a pattern like this as well. Something to consider for today, that the more and more people know it, if this does the same thing straight off the open today, because everyone's seen the last 2 days of reverse through the high, it may do that even faster today if it's going to do it, because everybody knows it's going to happen. And so you don't want to be waiting for some kind of setup pullback. If you don't just go for it, you end up in a situation where you've missed it and it's already gone. The only other thing, and this is where I'm going to rely on technicals today, what the S&P's done now, so slightly off the debrief, but it kind of relates because you're picking the information up. What the S&P's done, and it did it, this one was a gap down, it reverses. That one trades down, it reverses. That one trades down, it reverses. This one trades down, and reverses. So anybody who has tried to sell it every time has got burnt. If they're not out, I think they run the risk of getting rushed to the upside today. That's not something I want to get married to as an idea, but if it starts to do the opposite and it does that sort of open and then breaks up, I think that could be quite a good one to go to the upside. It's going to depend where we open though, seeing as things bounce back. It's going to be well, 62 now. It's traded down here so far today, gone back to the 45s and back, so we shall see. But on that, I'll wrap it up. I will send over that debrief. I'll also send my Fed debrief as well. I've got a quite detailed playbook debrief as well, so I'll send that. And I don't know if I sent it, but I may send a sort of image of suggested sort of tagging structure as well. So I'll send all of that. So a few things heading your way. I'll put the links in the group now, and then what I'll try and do, I might even do it as a sheet on the PowerPoint, because I'll send that at the end to everybody and just have a sheet of useful links stuck on that. On that note, I'll wrap it up. We'll come back at 2. We'll do a bit on weekly prep, kind of what you want to try and do over the weekend, how you want to try and sort of structure the following week. Next week's also incidentally Thanksgiving, so expect a quiet Thursday, Friday next week. Right, I'll see you all in a couple of hours.
Thank you.
All right.